Good morning, everybody. Happy Thursday. It's June 4th, 2026. Great to be with all of you today. It's about 8, almost 9 o'clock here on the East Coast. My name is Bob Lang, and it's time for our daily bites, which we bring to you every Monday and Thursday morning. Great to see all of you today. So what have we got here? Well, we had a little bit of a stumble yesterday, a little bit of a pullback. And looks like markets are sort of following through today. We do have a mixed market. Dow Industrials, wow, huge move up today, almost 500 points. It did, of course, did lose 600 yesterday. So that is of course, that is 30 stocks over there. We're seeing some good strength in names like United Health this morning. I think Home Depot's up a little bit, Walmart, some of the industrials. Tech names, not so much. I think we're seeing IBM was down a little bit more. It's down about flat right now. Apple's up a couple of dollars as well too. What do we have to look forward to here? Of course, tomorrow is the May labor report. We'll be hearing about jobs created. So, of course, it's an estimate. We'll hear about wages. This morning came in with some data as well too. Unit labor costs for the last quarter were down sharply from 2.4 to 1.8%. Productivity was also down, which could be a problem when it relates to growth and this type of growth that we're having, whether it's being driven by inflation or by organic growth. Of course, that it wasn't a huge miss, but it was just a small miss. So it's just something that the economists are going to be keeping an eye on. Jobless claims up a little bit as well, too. We're seeing the S&P futures down about 23, 24 handles. Of course, probably getting hit from names like Broadcom and CrowdStrike, who reported earnings yesterday. They were real good earnings, but the market is saying, hold your horses right here, because the stocks had been driven up quite sharply in front of earnings. So, of course, we always know there's a million reasons to sell, and one of them could be, well, the stock's gone up too far. It's time to take some chips off the table. I think that's what some of the investors are looking at this morning, because all in all, those two earnings reports, along with a couple of others like Five Below and Viva and C3AI, were also very strong. So if you do see some pullbacks here in those names, I'd probably look at those as some good opportunities. Also, Palo Alto Networks, which had really good earnings Tuesday night, got belted yesterday. It's going to be down a little bit on the collateral move fallout from CrowdStrike, which, look, I mean, I profiled CrowdStrike along with Palo Alto Networks and Cisco Systems last month with Jim Cramer on Mad Money Off the Charts. I want to say it was like May 18th or 17th or something like that. And all three of those stocks up significantly. In fact, CrowdStrike was about 520 at the time, and I said, I told Jim when I wrote my report up there, before he put it up there, he said, I said it looks like it probably has room to run to 600. Sure enough, it went to 750. Right, even further than I had thought it would go. That was the third one that we did on that program. It was his favorite name, so that exceeded my expectations quite sharply. But of course, it's pulling back a little bit here this morning. Same with Broadcom, Cisco. Of course, just the story there. That stock was about $97, $98. It went up. It's up to $128 right now. That's actually up a little bit this morning as well too. So what can we expect here in the next couple of days? Well, I think a little volatility coming into the jobs number tomorrow. We could get some volatility there. If the VIX starts coming down today and it gets back into the 15s, we could see a good strong rally tomorrow. So keep an eye on that, regardless of what the number looks like. If we're well bid into the before the jobs number print tomorrow morning at 8:30 Eastern time, then it's more likely that the markets are going to go up, regardless of how strong or weak that labor report is going to be. Next week is could be a pivotal week. Of course, we're getting into the end of the June futures market cycle, and that will be rolling over into the September futures very, very soon. We're also going to have a big options expiration coming up in about 2 weeks. That'll be June 18th. And why is it not June 19th? Well, the markets are closed that day. So June 18th will be the big triple witching that we always talk about. It creates a lot of volatility. It is also in front of a 3-day weekend. So we have a lot of cross currents coming at that particular day on the 18th. We have not only have options expiring, but futures expiring, options on futures, options on index options expiring as well too. And that is also an important day for markets because it's going to be a 3-day weekend. We often see volatility recede, right? So if we were receding, if we pull back in volatility leading up to that, that could be a problem for the bulls next week. But as it is right now, listen, markets are still in an uptrend, strong uptrend right now. You can't argue that, right? Even though yesterday's candle was red and down. We had been talking, at least in my market blast, and last time we were here together on the Daily Bites, talking about how the market probably needs a pullback, recheck back down to the 20-day moving average. Now, the 20-day moving average here on my chart is this dotted line, right? This dotted line, we haven't checked that back on that. We haven't tested it since way back here in early April. So it's been almost 2 months since the S&P 500 has visited this 20-day moving average. Now, of course, the shorter term moving averages like the 8 and the 10-day moving average have been working as really great support as the market's been climbing higher, right? So we have higher highs, higher lows. So that is our textbook definition of an uptrend. And even if we do pull back this 20-day moving average, we'd call it about 74.65 or so. That's about 90 handles on top of the 60 from yesterday. If we do get down to that level, it's going to feel like a monumental moment, a crash is occurring or something like that. But of course, it's not. Remember something, the S&P 500 is now up to 7,500. It's not 5,500 anymore. So anytime we get a 1% move down on the markets, which is generally normal, not normal for one day, but normal for a progressive slight pullback, that's 75 handles. That's going to feel painful, of course. So as we keep moving higher, then those levels are going to feel much more painful. When you get the Dow Industrials, which is currently at 51,000, a 400-point move is not much to think about anymore, right? It's not even 1%. The Nasdaq, of course, at 30,000 as well too. A 1% move is 300 handles, 300 points, right? Doesn't seem like that much, but the S&P 500 being at 7,500, we're going to feel that as well. So what are we looking at for the week here? Again, we have the jobs report coming out tomorrow. We're looking at about 80,000 new jobs created, 115 from the prior month, rate coming in at 4.3, and hourly wages year over year supposed to be down a little bit from the prior quarter. So consumer credit is also coming in too, supposed to be coming in lower than it was last quarter. So so that'll be the markets again usually get a little bit of volatility leading into that number. We'll probably get a better clue on how that's going to look towards the end of today, the last 90 minutes or 60 and 90 minutes of the day, trading day. We'll see where some of the money flows are coming in to the market or coming out. That's going to be it, everyone. Not a whole heck of a lot to talk about here in the markets, but I did want to remind all of you, again, we talk about this once in a while, take advantage of some of the free stuff that we have on the website, explosiveoptions.net. You can find all this on explosiveoptions.net/options-trading-education with a slash. You can go there and you can see all these free resources here. The chart of the week, which I just put out yesterday. It's had a great track record for the past 18 months. Check that out. It's free. You can join the YouTube channel. The Daily Bites, which I bring you every Monday and Thursday. This is, of course, the Thursday version of the Daily Bites. Options Insights blog. I write those blogs every weekend. We've had those going for about 15 years now. Every weekend I've been writing an article just about. Haven't missed very many. Trading tutorials are on there. There's a 9-day challenge, a 30-day challenge for you to test your knowledge on trading and the online with online with options and technical analysis. There's an online mini course as well. We have educational webinars, which the next webinar coming up is with Andrew Heisinger from Quant Data, an options flow program service that he has. He's going to talk a little bit about that. And lastly, we have those options trading ebooks. We've written 6 of those over the past 12 years. I think these are all great resources for you, and they are the price is right on these things. They are all free. You can get into learning about options trading. I get a lot of people asking me, Bob, I just don't know where to turn to find out about how to trade options and to do things. And if you wanted a lower cost way to learn about it and take yourself to another level, obviously you can try the services. 2 weeks for $29, all 3 services. You can buy my book, which is Know Your Options, which is also available on the website. That's $19. So for a very low cost, you get all these free resources on the left-hand side and the new stuff to participate in the chat room or in the swing service for a couple of weeks and read a book as well too and learn. So lots of places to do. So thanks very much, everyone. Have a great day and have a great weekend. I'll see you guys all next Monday. Thanks.